Good morning, everyone. My name is Frank Milone, partner at FML. I just wanted to welcome you to our webinar relating to the PPP Loan Forgiveness Application. It is 11 o'clock. Thank you for joining us so timely. We do have about 150 people registered for the event, and we're waiting on a number of them to jump on. So we're going to give it a couple of minutes, so be patient with us. With me today is Bill Claffey, who's one of my partners who will introduce himself. Bill and I, we call this the Bill and Frank Show, have done a number of these webinars. Thank you so much for the interest. It seems like we've got a lot of people interested in what we're going to be discussing today, so really appreciative. Just want to let you know that we do have the ability to have you post some questions. You should be able to see a Q&A on your right side of your screen. Please feel free to drop questions into the group, and Bill and I will do our best to address them. Quite frankly, we will also probably not get to all the questions if these are normally the way the webinars will work. It's very interactive, but we try our best. If you have ideas on the content we're going to talk about today, has got a lot of detail to it. If there are areas that you would like to see us dive into more, please put that in the chat question box and be specific, and we're going to kind of accumulate those. And then I believe our marketing team will also be sending out potentially a questionnaire to all of the attendees today to ask you where you would like us to talk through next on whether it's the application or specific areas within the PPP forgiveness application, loan guidance, whatever. So we're going to ask you to provide us that feedback, and Bill and I will continue to drive content into you as we get closer to forgiveness process starting. So, Bill, you with me?
Yep, I'm here, Frank.
Perfect. How are we doing on registrations, Courtney? Give me a thumbs up or a thumbs down. Okay, so hey, Bill, we got a couple more minutes to waste. You're a big Yankee fan, right, Bill? You watched the big game last night?
Yeah, you know my thoughts on the Yankees.
Well, I'm going to tell you, I got up this morning. I was really excited. We had the ability to go through another Bill and Frank show where we got to engage 100 or so people on forgiveness application issues, but I also saw my Yankees sweep the Indians. I had a Fox Farm beer in front of me as I did it. For those of you who don't know, Bill and I live in the same area next to Fox Farm Brewery, which has got fantastic beer for our local area that they're able to share with us. So, Bill, the other thing that I was doing this morning as I woke up early was reading about how Subway's bread has too much sugar in it and is not considered bread in the EU. So it's now has to get taxed under the VAT tax laws. So, Bill, I don't know if we want to do another webinar regarding VAT, and Subway's bread having 10 ounces of sugar.
That's what keeps us busy.
But I have enough chit chat, Bill. I think we're good, and I think we're going to get ready to go. So again, thanks everyone for joining us. I'm really excited to be back with Bill and having the ability to provide you guys with some content. Just so you remember, Frank Milone, I'm a partner at FML, one of the founding partners, and I head up a specific area on the audit side as well. Bill and I are kind of co-chairing our COVID task force internally that we developed quickly after the pandemic hit us and changed everyone's lives. The COVID task force internally is made up of a number of people, and we get together quite often via Teams, and we actually find ways to address client issues, get guidance out, and do these webinars. And we have a website that page on our website that is COVID issue related. So please go to our website at fmlcpas.com and find that area for additional guidance. We usually will send out a recording of this webinar, and we'll also post it on our website. So today's topic is the PPP Loan Forgiveness Application. We've been getting a lot of our clients getting active now and trying to figure out how to go about applying for forgiveness and the issues that they're now identifying. And Bill and I thought it would be a great time as we turn the clocks to October to get back engaged and hopefully start doing these again routinely. So thanks again for joining us. Bill, I'm going to kick it off to you, introduce yourself, and we'll get right into it, okay?
All right, great. Thanks, Frank. Yeah, just by way of introduction, Bill Claffey. Frank and I have been doing the majority of these webinars. Quite frankly, we were hoping to do another webinar back in August, even July, certainly early September. Unfortunately, the SBA has kind of gone silent, which we're going to go through since early August. But we thought it was important to kind of regroup with the folks that we've been talking with, both folks that have been following our webinars and then new folks that are joining, just to kind of set the kind of recap of where we stand. And as folks are now starting to kind of get the forgiveness application back into their kind of the frontal lobe of their brain, just trying to let them know that, hey, this is what's out there. This is what we know. We have a section on kind of this is what we don't know. And just try and talk through some of the pros and cons of where this thing's going and, timing on loan forgiveness application and so forth. Sometimes it's a lot of folks may kind of feel like I don't know what I don't know. And we're just kind of, we wanted to be here to let you know, hey, this is what's out there and this is what's kind of unknown to date so that you at least have a little more confidence that you're not in the dark here. So, real quick, this is kind of our table of contents. These are the points we want to go through. We're going to recap the guidance basically since June. Some of this might be a little bit of carryover from our last webinar, but wanted to kind of set the stage as to where we stand. We want to talk about timing of forgiveness. As most folks know, we have the when the Flexibility Act came in, we have the 8-week or the 24-week period. Well, that 24-week application or 24-week covered period is coming up for a lot of folks. Did the math here, right? If your loan disbursement was on April 20th, and I know a lot of folks tended to get their loans in the late April, early May timeframe. If you're going with the 24-week option, that 24-week period ends on October 5th, right? So we're kind of getting back into loan forgiveness application mode here and end of covered periods mode. We have a slide in here on the logistics, bank forgiveness portals. We've tried to do some diligence on either from talking to our clients, talking to various banks, some basic web research I did just to give you a sense of where the banks are at and who's accepting, who's not accepting. We have a topic here on outstanding issues. We'll get into some fact patterns. Frank and I will kind of back and forth some of the issues that we think are still open. Talk about tax matters, gap treatment as most folks are starting to think about year end. Obviously, the gap treatment for these loans is going to be very critical to their financial statements. So we're going to go through that. And then we have kind of our last section is just pros and cons on why you might want to file now and why you may want to hold off. And that's kind of fact specific. It's going to be dependent upon your fact pattern, whether you fit into certain exemptions, but we'll go through that. And as Frank mentioned earlier, please submit your questions. I don't know if we'll be able to get to all of them today, but we talked earlier this morning about potentially trying to do some mini webinars where we can take a little deeper dive on maybe some specific topics. So whether that be, pass through payroll compensation, can we take a little deeper dive? I don't know if we'll get to that today, but certainly we'd love to present that, on a more micro scale going forward. Okay, so as we talk about a recap of the most recent guidance, here's basically just to give you a sense of timing, right? So we have the stuff that came out in June. The Flexibility Act really threw a curveball into the PPP, changed a lot of things. We had a revised SBA issued forgiveness application, which incorporated the Flexibility Act provisions. And then we had a couple interim rules. Those SBA rules that we've talked about in the past came out in that June timeframe. And then we had a break, right? We had nothing kind of coming out in July, and then we get into August, and we had the SBA updated their FAQ documents. They came out with a very specific FAQ document related to forgiveness, answered some questions, left some others open, which we're going to talk about in the outstanding issues section of the webinar. And they issued a couple additional interim rules, which were helpful, but in some respect did not address some of the key concerns that at least I had, and I'm sure a lot of the folks on this webinar had. But and then you get to August 30th through today, and there really has been nothing that's come out, which has been somewhat infuriating, somewhat questioning. But we are in an election campaign, election cycle here, and whether that has something to do with it, I don't know. But we're kind of, everything's been silent for the last 7 or 8 weeks. Okay, let's recap what happened in June, right? So you got the Flexibility Act, you've got the forgiveness application, you got these interim rules. I'm just going to touch upon the key points that came out of it. As most of you know, they introduced this 24-week covered period, which allows folks that couldn't spend the money in 8 weeks to look at that over a 24-week period. We've got the introduction of the loan forgiveness application, which is the 3508, but now we have the EZ form. And so that EZ form basically allowed certain companies that met a criteria of having no, if you didn't have a reduction in employees and didn't have a reduction in wage base over 25%, to be able to use this this EZ form that kind of made it a little bit easier for folks to file for the application. Basically, what it stripped out was a lot of the FTE calculations that were kind of giving folks headaches. You've got the revised 3508, I'll call it the long form, which incorporates some of the concepts of the Flexibility Act, some of the increases in compensation, some of the new exemptions and so forth. We have the introduction of I call it the catch-all exemption. It's really this exemption that came in through the Flexibility Act that basically says if you can demonstrate that you could not operate at pre-COVID levels, which is defined as February 15th, and that inability to operate at that same level was related to a statement from the CDC, HSA, or OSHA that related to sanitization and social distancing. If those rules that came out did not allow you to operate your business at pre-COVID levels, then you have this exemption, which basically can wipe out any FTE reductions that you may have had through the covered period. And then the last thing being the pushback of the rehire exemption. So as most of you knew early on, there was always this exemption if you had an FTE reduction of, let's say, 5 employees, right? So let's say you had 30 employees, and then you go through your covered period, and just based on your normal business operations and operating your business in a fiscally responsible way, you had to let go of 5 people. When you do that FTE quotient, you're going to have a loan forgiveness reduction calculation that's going to be applied to your forgivable amounts. The old rule was, well, if you can get back to your February 15th numbers by June 30th, then the FTE reduction calculation basically goes away, right? You don't apply it. Well, when the Flexibility Act came in and the guidance that came with it, they basically pushed back the rehire exemption to December 31st, 2020. That's important because some folks may be saying, well, I'm right now, I'm getting to the end of my covered period, my 24-week covered period that ends on, in my example there, October 5th. And I had a reduction, and especially I may have had a reduction because
Hey, Bill. So I'm not sure if anybody else has lost Bill or if it's just me. Bill, I think we lost you there. You may want to turn off your video. You may be having a hard time getting streamed. You hear me, Bill?
I just turned off my video. Can you hear me now?
Yeah, that's better. Why don't you? Yeah, we just lost you for immediately right at the end there. So why don't you just keep going?
Okay, so I was talking about the catch-all exemption.
Yeah, I think we got to the rehire exemption, Bill.
Okay, yeah, so the rehire. So that becomes important because as folks are kind of getting to the end of their 24-week covered period, let's call it October 5th in my example, you may have had a reduction in FTA, And that reduction, I mean, let's be honest, right? A lot of folks use the PPP loan to help them get through that very critical period. That may have got them more than 8 weeks, but may have got them through 10 weeks or 11 weeks. But then they had to let some folks go, either through furlough or layoffs or what have you. And so now that that rehire exemption is pushed out to December 31st. Well, if so as you're looking to apply, you may have to hold off on applying until after that December 31st date so you can take advantage of the rehire exemption. Still with me, Frank? Still good here? Okay,
Yep.
Great. Okay, let me see. More things here. Okay, revision on the cap on non-payroll. As most of you folks remember, you had the 25% non-payroll cost that got pushed to 40%. Very critical for a lot of companies that that need that extra cushion on the non-payroll to exhaust their funds. Second bullet here. This is an interesting one. So, and interesting in the way not only in the way that it came out, but also in the way that it's kind of the way it's just based on facts and circumstances, what's happened here and kind of the lack of guidance and the lack of movement from, possibly the banks and the SBA on receiving loan forgiveness applications. Just as a note, the SBA, I believe it was in mid-August, they announced that they would be willing to accept loan forgiveness applications. But if you recall, that process, it goes from borrower submits their loan forgiveness application to the bank. Bank has 60 days to review the loan forgiveness application. They then give they make a determination or render a decision on that loan forgiveness. That then gets pushed to the SBA, and the SBA then has 90 days to return a decision and remit the money back to the bank on any amounts that are forgiven. The interim rule that came out in June basically said, you have this 8-week period, you have this 24-week period, but the interim rule said that if you exhaust your funds prior to the
Hey, Bill.
Hey,
You're live again.
Okay, sorry, I have a little connection problem here.
Yep, you're back.
Okay, the inability to apply for the loan. So we're talking about that ability to apply for the loan prior to the 24-week period. So some period between 8 weeks and 24 weeks. Unfortunately, the banks were not open, right? So procedurally, you have to go through the bank, apply for them, then it goes to the SBA. But your bank wasn't open. So what do you do here? And that becomes relevant because some folks, like I mentioned, some folks may have used the PPP to get through 11 weeks of payroll, but they had to let folks go. We're going to talk about that in the outstanding issues, but under the interim rule, you could have applied at the 11-week period, right? And then you kind of freeze your FTE number at that date, but your bank portal was not open. So now we're sitting here in October. Some bank portals are still not open, and so the question arises as can I go back and backdate that application, because that was kind of the way the interim rule. That's the way that discussed that application process. Last bullet here, payroll costs for the 24-week period. So they up the amounts, right? So, and this is going to be another outstanding question we'll get into, but basically, for owners, partners, owner employees, that amount goes up to $20,833. If you're just a standard employee, the amount goes up to $46,154. So that really helps folks too, because that if you couldn't get through it in the 8-week period under the old standards of the 15,833 number, right now you've got, especially with the employees, you've got a lot more wiggle room there to up the compensation to those folks. Continuing, we're still in June here. Remember, this is early on, and we did a webinar, I think it was mid-June, so we probably covered most of the stuff, but it's been kind of silent since then until we get to that August timeframe. The pushback of the deferral period, so that if you look at your promissory note, you may even see on the top that the deferral period is 6 months. Well, the Flexibility Act and the rules that came thereafter push that out to either 10 months if you actually never apply for forgiveness, or the date in which the SBA remits the funds back to the lender. And then if there's any outstanding debt that's owed, then that's the date that your loan is deferred until. So that question, I just had a call with a client yesterday on, do I need to, I haven't applied for forgiveness yet, but my 6-month period is coming up in October. Do I need to start paying some of this back and then get reimbursed for payments? That's not the case. The deferral period is extended much further out. To do ability to apply for loan forgiveness 24-week period. So, okay. So we talked about this last bullet. It's kind of a rehash of the previous comment I made on the ability to apply for loan prior to that.
Bill, you're still with us. This is great. Hey, I just want to make a quick comment. Seems like people are losing audio periodically and not hearing. Bill is, unfortunately, he's had 2 technical issues. I think we're back and hopefully it's going to work better. If for some reason you're not hearing us, we do record these. We do have slides. You can rest assured that we'll get you information. Again, with everybody's working from home and school from home, the bandwidth issues tend to be a little bit more problematic right now. So we do apologize. Bill, am I on the right slide here, Bill? We're working through. Perfect. Yep. Thanks again. Yep.
So the maturity date. So again, as many of you folks may have, when you look at your promissory note, you're going to see a maturity. Now this is, assumes that the loan is not forgiven, right? But you may have a maturity date that's sitting at 2 years. If your loan was dispersed before June 5th, you can work with your lender to extend that maturity date out to 5 years. It's really a lender decision. But if you have a loan that initiated after June 5th, then you automatically get a 5-year maturity date. And then the 10-month loan forgiveness application submission requirement. Again, I believe even the revised application may have an expiration date of October 31st. But that ability to apply for loan forgiveness extends 10 months from the end of your covered period. So if you end up choosing the 8-week covered period, then 10 months from that date. If you end up using the 24-week covered period, which is for most folks probably coming up in October or early November, then you get 10 months from that time frame to submit your loan forgiveness application. And we're going to talk about the pros and cons and doing it sooner rather than later. Obviously, that's a very lengthy process. Okay, so then we fast forward to what comes out in August of 2020. And I just picked out some of the things I thought were relevant to most folks. I've gotten this question, right? So there's an FAQ so basically there's a long list of FAQs that the SBA has been keeping kind of since day one. They've gone from questions, initially it was questions 1, 2, 3, and 4. Then it was, they had 5, 6, and 7. Well, we're up to question 51. And basically they provide that vision and dental benefits are included within healthcare costs. Then the SBA issued what they call the loan forgiveness FAQ. And I would have put the question numbers in there for you folks, but it got a little confusing because they have different subsections within that loan forgiveness FAQ. And so the question numbers within some section are question 1 and 2, and then you go to another section and they're also 1 and 2. So I just figured this is on the forgiveness application. First FAQ is that if you're a sole proprietor, independent contractor, self-employed, without employees, that's important. You're automatically use the 3508 EZ, which makes sense, right? Because you don't have employees, you don't have the FTE counts to keep track of. The next question there is on lost commissions, bonuses, and hazard pay. That was actually already answered in one of the interim rules, but certainly was a real hot topic early on as companies were trying to figure out, how do I maximize my PPP loan? But the SBA has clearly come out and said you can use hazard pay. Actually, hazard pay became an issue with a lot of clients that had, especially in the manufacturing sector, that had folks coming in, and those businesses wanted to reward the employee.
Hey, Bill, we're losing
taking on some risks with regard to COVID and so forth. But am I still alive here, Frank?
Yeah, you're back, Bill. Yep. Hey, we lost you again, Bill.
Can you hear me?
You're back. Yep.
I apologize here.
No worries. I think your kids got to get off school. Right. I think it's.
Yeah, I know.
I think school's not important anymore for you.
I can stop doing their work. You've got the so the next FAQ is on secured debt, right? So this question came up pretty frequently, but questions came up. Well, I've got another business loan. Can I take the interest on that as part of my PPP cost? Well, it was always mortgage interest only. So they clarified this to some degree, that it had to be some sort of secured debt secured by real or personal property. So obviously, if you've got, real estate, you've got a loan, mortgage interest on real estate, then that's includable. But also, if you have a quote unquote a mortgage on transportation vehicles and other personal property that's secured by that property, that's considered a mortgage interest debt, and that's includable in your forgivable costs, for that piece of the forgiveness amount.
Hey, Bill.
Yeah.
Hey, Bill, real quick. So one of the things we may be able to have you do is call in. If it happens again, we may have you call in to the number. It may be a more secure process for you. So if it happens one more time, I'll have Courtney send you the call-in number. I'll switch over to the gap slides while you're calling in, and then we'll kind of go back and forth. All right.
Sounds good. Okay. Okay. The last bullet here is on transportation. This question came up many times. And what the SBA basically did is they basically said, well, when they say transportation, it's distribution of transportation with respect to utilities only, right? So, and now earlier on in some guidance, they talked about gas costs. So arguably some fuel costs could qualify as well. But when they talk about this transportation, they're really talking about distribution charges related to utilities.
Yeah, for some reason, transportation has been a big issue, Bill. I know for some of our clients, we've had a lot of back and forth, and I think this is pretty much the only guidance that we've gotten at this point, right?
Yeah. Yep.
Okay.
Okay. So this, with respect to the compensation caps, right? So we went through it in a previous slide. You've got kind of owner compensation. Partner compensation, right? If you choose the 24-week period, you're capped at the $20,833 versus on paying an employee, and that compensation is capped at the $46,154. This interim rule that came in August basically said, it kind of gave a little bit more clarification on these owner employees. If you're an owner employee of an S Corp or a C Corp, and this probably pretty prevalent with a kind of a C Corp structure where you may have folks that own 1% stock in the business. They set the threshold at 5%, right? So if you own stock of less than 5% in an S Corp or a C Corp, then you fall under the employee cap, which is the 46,154, versus the owner cap, the owner employee cap, which is 20,833.
Hey, Bill.
Yeah.
The question came in, and I don't know if we know this or not, but is that 20,833 inclusive of medical costs? I didn't think owners were eligible for the medical. Is that right?
Yeah, right. If you are, it depends on your structure. Depends on the structure, right? So if you're an S Corp, the medical costs are not includable. If you're a C Corp structure, then an owner employee can include healthcare costs. If you're Schedule C, right, healthcare costs are considered part of your your net profit. So that's not healthcare is not includable for a Schedule C.
Okay.
And if you're like a GP, then same thing. You're not including those healthcare costs.
Okay. Thanks.
Okay. So then we get into, so this was a pretty important clarification here. These next two bullets are actually very important. Rent, right? So if you're renting space, you're renting space for $10,000, but you're subletting it to a third party. You've got to net what you're earning in rental income against your rent expense, and that's the only piece only the net is includable as a forgivable PPP cost. And then the second rule related to rent, which this was also kind of a pretty hot topic, which is related party rent. The SBA clearly said that related party rent was eligible early on. But then they came out and clarified and basically said that if you're paying related party rent, you can only claim for forgiveness the amount that is related to the underlying mortgage interest of the related party attributable to the space rented, right? So you've got a related party that's got a massive warehouse, massive building, right? And if their mortgage interest is $100 and you're renting 20% of that space, well, you can only include $20 into your related party rent forgiveness amount.
Yeah, Bill, this is a big issue for a lot of our clients, right? They have separate buildings that they rent through individual ownership structures, right, that are directly related to the business. And this ended up becoming a pretty major issue for a lot of our clients.
Yep. Yeah, this was a pretty big statement by the SBA. Again, this was all in the August, and I believe it was August 11th.
Yep.
Timeframe. And then there was a couple other. I only put it in here because it was they issued an entire interim rule instead of addressing the questions we're going to talk about upcoming here. They put a big interim rule related to protesting SBA decisions. Not that that's not important, but one, there were more critical issues to discuss, and two, from a timing perspective, they could have issued this rule, in October or November or December when that issue actually started to arise. So that's a recap on kind of where we stand. The bigger rules that came out. I know I didn't hit on every single one of them, and like I said, we want to use the comments coming in from you guys, and then our own internal intelligence to try and do a little bit deeper dive on some of these topics. Maybe keep those to like a 30-minute webinar, but really kind of get into the nuts and bolts on some of those issues, so that folks are kind of fully aware of application with respect to their specific loan forgiveness application. Okay, so timing on the loan forgiveness applications. As we talked about, you've got this 10-month period, right? So you kind of look at your covered period. When does my covered period end? I've got 10 months to get my application into my bank. And went through this, but then you've got the 60-day review on the lender piece, and you've got the 90-day review on the SBA piece. Once the SBA does that review, they'll remit them. They'll make a determination. They'll remit the money back to the lender, and at that point, if there's anything outstanding, then your loan your loan payments, principal and interest become due. Okay, so bank portals. So there's we're going to get into this in the next slide, but just kind of an introduction to the next slide, right? Bank portals, and I highly recommend that everyone here in the audience here reach out to your bank if you haven't done so already. Like I said, we gathered information as best we could from either relationships that we have with banks or done some web-based research. But reach out to them, find out when they're doing it. If you're trying to accelerate your application, talk to them about getting access to their portal. And here's just a kind of a laundry list of where we think things stand. And I put together the slide yesterday. Things could have potentially changed between yesterday and today. But from our understanding, you've got banks that are open and they're accepting forgiveness. It's really forgiveness applications, right? So Liberty, Windsor, the list is right here. That's our understanding of what these banks are doing, right? So they've got it. Typically, they're going to have an electronic portal. Some of the smaller banks may have a portal, but they may require you to fill out a hard copy of the application, complete hard copy documentation, kind of zip all that up into a PDF file, and then upload it into their portal. I'd say that's kind of the minority fact pattern that I've seen. Most of the banks seem to have an online application process, right? So you give them your loan number, you give them the loan amount, you give them maybe the disbursement date, some other identifying information, and that's kind of like your password and your username and password. That will get you access into their portal, and at that point, you start kind of running through the application in an online format. My recommendation would be, go through the exercise well before, unless you have a very small loan, go through the exercise well before you get to that point, because it gets, as with any kind of online tax filing, any kind of online bank filing, you get a little bit lost in the minutia of detail. So I would get yourself, get the application, work with your CPA, and get that filled out on paper first or in an Excel spreadsheet. Could you sneak back there, Frank?
Yeah, sorry, that was a mistake. Hey, Bill, on the, just to reiterate that point, I know when a lot of our clients and even ourselves were going through the application process, the online application was very confusing as to what was in the application, what was attached manually via, uploading into documents, and required a lot of planning that people weren't ready or able to do because of a lack of knowledge. I think we have more knowledge on the forgiveness with some big questions that we'll get to, right? But we have more knowledge on what you're going to need to apply and prove. And that planning process with your advisors is so critical. So it can't be understated. So.
Yeah, no, absolutely. And there's, the documentation requirements are listed on the applications. And the SBA has, I didn't put it into any of the interim rules, but they do. Are you losing me again here, Frank?
No, we're good. Good. Keep going.
You do, they did provide that, payroll provider reports are acceptable forms of documentation to document your cash compensation amounts and your FTE numbers. I know that they're also asking for 941s. Not exactly, I've got a lot of questions about, well, why am I sending a 941? I honestly can't give you a very direct nexus between the 941 and what you're submitting, because the dates are always going to be a little bit different, other than it's just a kind of a sanity check maybe for the SBA to say, okay, or maybe the IRS to make sure you guys are filing, right? So, but the payroll reports, I would recommend as well, and I've been recommending it to all the clients that I've spoken with, is that should be your starting point, right? If you haven't gathered that documentation already, reach out to your payroll provider. Many of them have PPP reports, right? So you can reach out to your payroll provider. Let's say you're using ADP, for example, or Paychecks, or whoever it is, Paycom, whatever it might be, and say, I've got a PPP loan. I want my FTE count for my base period, right? The denominator of our calculation. I want the February 15th, 2019 to the June 30th, 2019 FTE count. They should, right? That's kind of request number one. I want the second base period. I want my January 1st, 2020 to my February 29th, 2020 FTE count, right? So they will give you a report that will give you that number, like 29.5, 27, whatever the number is. Then request the same report for your covered period. So I would recommend getting that report in 3 different fashions. One would be get it for your 8-week period. Figure out your disbursement date. Keep in mind that there's an alternative cover period that we've talked about in past webinars. So if your disbursement date was on April 25th and you make payroll on either a weekly or a biweekly basis, or less if you're paying daily, you can move that covered period from April 25th to the date of your first payroll, right? So let's say you made your first payroll after April 25th on May 2nd, right? You can shift your covered period with respect to your payroll expenses to May 2nd through 8 weeks out from there, or 24 weeks out from there. That becomes important because we've got a cash and an accrual concept. Cash on the front end, accrual on the back end, right? So if you move it up to May 2nd, in our example, you make payment of $10,000 in payroll. That's all included in your forgivable cost, even though it was kind of incurred in a prior date.
Bill, I think you're getting into a lot of the detail that I think is turning people around. And when you get into this application and the requirements, and then you start looking at individual facts and circumstances, it's really hard to manage the information inflow. And then it's also extremely hard, and Bill, I know you and I have talked about this, is that the process here that the guidance has talked about, that they want payroll reports in a manner like they've put an emphasis on getting information directly from payroll providers, right? That's what the evidence that they want to see.
Yep.
But the problem that we're seeing is the payroll providers aren't in a position to give you accurate reports. And we've seen this on the application when we were trying to get information to apply for the PPP loan, where the payroll providers, quite frankly, just weren't able to stay kind of up to speed on the changes in a way that put the information in accurate formats. We're also seeing it now, Bill, and you have more experience on this than I do, on the payroll providers providing reports that just aren't able to be manipulated in a manner that gives you the right answer.
Yeah, exactly, Frank. I mean, that's a I've seen that with a couple of the payroll companies. Well, I think they've updated some of their reporting that they're issuing out, but Like just very specific fact pattern is I had a client request the payroll, the FT report for, not 8 weeks, but they exhausted their funds in 11 weeks. And so let's get the FT report for that period, right? Disbursement date through 11 weeks. And the payroll report came back, and it just basically, the denominator that it used was basically based off on a 24-week period, right? So if you have, Joe Smith is working 40 hours a week for 11 weeks, they're only treating him as like a point, whatever the number that is, 0.4 or a 0.5 FTE, because they're using the denominator of 24 weeks. It's an issue. I think the payroll companies are trying to fix that, and I've seen a couple updated reports that did seem to be able to give you that kind of that interim period between 8 and 24. But
yeah, I just think, I think like we talk about, Bill, I think you can do your best with your payroll providers, and it's not a judgment on them. They're doing the best they can, but you may need to manipulate your reports and then work with your financial institution in understanding why you're doing what you're doing. And this is where some of the guidance that we were looking for on how to apply in between your 8 and 24 week, and where's that process stand, and how is it going to happen on the application, and all of that information is really hard to find at this point. So.
Yeah. But I would use that as your starting point, right? Use that as your starting point. Get those reports from them, because that's going to be that's what the banks and the SBA are going to be looking at. But if you look at it and it looks funny, I mean, reach out to, either reach out to your CPA or reach out to whomever, and reach back out to the payroll provider and see if they can provide support. Yep.
Absolutely. So, Bill, I got the outstanding issue slide. We're at 11:43. I just want to be cognizant of the time.
Yep. Yeah. So we've got outstanding issues. Here's kind of the things I think a lot of the things boil down to. We've got this catch-all exemption, which is really a very powerful exemption, right? If you can prove it. Unfortunately, they have issued literally no guidance on how does, other than they said that you can have an indirect impact, right? So if you're in the restaurant business, clearly you can directly demonstrate that there was CDC guidance that impacted your ability to operate at 100% or pre-COVID levels, right? But what if you're in a business that's providing maybe you're a manufacturer that was, deemed an essential business, but your supply chain was impacted? That's an indirect impact. I think you can get there. They haven't issued any guidance on exactly, well, how do you get there? Like what do you and what do you submit with your application? Do you submit the statute or the CDC regulation and then a narrative of how you were impacted? They have not issued any guidance there, and because this exemption is so critical to many businesses that, like I said, needed the 24 weeks, but then once those funds exhausted in week 11, they had to do some layoffs. So anyway, so that's an open issue. Voluntary resignation for cause termination. Exactly what kind of documentation is necessary for that, right? I think a lot of folks have had people that may have voluntarily resigned or asked for a reduction of hours. Obviously keep any documentation that you have on that matter, but there's not 100% clarity on exactly what's necessary for that. Prorating the compensation caps. This is an issue that, for example, if you were looking at an 11-week period, do you prorate that compensation cap of 46,154 for employees? Arguably, I think there's an argument that you don't, right? So even if you had 11 weeks, you can increase that comp to 46,154, but it doesn't seem to pass the smell test. But I don't think that technically that's the wrong answer.
Yeah, I think we talk about this a lot, Bill, right? It doesn't pass that smell test, right? We know what the intent was with the numbers. When you start giving flexibility in how you can apply and for what period you can apply, they didn't give us anything to address how those caps get now impacted. So now, without guidance, people are going to have to make educated decisions with their advisors, and they're going to have to document it, right? Document it in a manner that if you have a loan that may get audited, you can document your rationale for doing what you did and why. Without guidance, that's the only thing we can recommend here.
Absolutely, Frank. Okay, so payroll reports. This is the issue I was talking about, where you've gotten payroll reports that may have that don't seem to give you the right information if you've got a less than 24-week period. If you give them the 8-week period, what I've seen is they typically are correct because their numerator is the number of hours worked and their denominator is 8 weeks times 40, right? So 320 hours. But when you get into that interim period, the denominator is 24 weeks times 40 hours.
Yeah, so it's giving you either 8 or 24. It's not giving you anything in between, right?
Not giving you between, and the interim rule clearly states that you can apply in between.
Yep.
Of course, the banks weren't open. Total cost for periods over 8 weeks. Okay, so this is something. This is a little bit mind-numbing, right? If you look at the way the application actually technically and mechanically walks through, it just asks for your payroll cost. So let's say you got a loan for $1 million, and that should typically cover about 10 weeks of payroll, right? 2.5 times your monthly payroll. But you choose the 24-week option because you couldn't exhaust the loan in 8 weeks. You choose the 24-week option and you apply, and you don't backdate your application. You apply in 24 weeks. But you had layoffs. You had 25% of your workforce you laid off. If you go out 24 weeks, you're still going to spend well in excess of $1 million in payroll. You might spend $2 million, right? Because you're 10 weeks, if you kind of just double that, even with layoffs, you may spend $2 million. Well, the application just asks you to put your payroll costs during the cover period. It doesn't ask you to put your payroll costs reimbursed or paid from PPP funds. It doesn't say put your payroll costs, put your non-payroll costs, come to a sum of that number. And then put, typically in a tax form, you might see, okay, now put your loan amount. Okay, the next line would be, choose the lesser of these two amounts and then apply your FTE reduction quotient to that number. It doesn't do that. So does that give taxpayers the flexibility to put in $2 million, let's say, into that payroll cost, even though they only had $1 million loan? And then even if you apply, and then, then go through your reduction quotient calculation, and even, 75% of 2 million is still going to be well in excess of your loan amount. I don't know the answer to that. I wish I did.
No, and you know what? And the banks aren't providing a lot of guidance either, right? Because the banks don't know, and they're just processing applications. They're really not on the hook for the forgiveness. They are, but they're not. The guidance they are issuing is not via the bank. So it's funny, we have clients calling their financial institutions going, how are you guys going to handle this when you do open a portal? And they don't know. They do not know the answers to these questions, which is why, in my opinion, Bill, and you would agree, there's a lot of banks that are waiting for additional guidance before they open their portals. They just want clarity, which unfortunately at this point, we're not sure we're going to get.
Maybe after the election, hopefully before, but maybe after the election. Okay, so we talked about the back date. I'm going to save the tax point till we get to the tax. I know you got some gap slides that are really critical here. Okay, so we're at the tax slide. So the tax, this tax piece, this is, as most of you folks know, the CARES Act provided that the cancel, forgivable loan, right, cancellation of that debt, that's typically taxable. The CARES Act specifically provides that it's not taxable. Clearly a legislative intent showing this. We don't want to tax this income. We don't want to tax this as income. Then the IRS notice comes in and basically says, okay, that's great, but that's tax exempt income. So therefore we're not going to allow you the deductions for those forgiven expenses. Well, you basically just taxed that forgivable loan in the way of taking away the deductions. Wanted to point out here, there's been a lot of resistance to that. The Senate and Finance Committee, there's if you can just Google it, there's a letter that they submitted to the Treasury Secretary, and basically saying, one, it's against the intent of the CARES Act, and two, they believe that the IRS has incorrectly interpreted the Internal Revenue Code with regards, and I'm not going to get too deep into that, but they've incorrectly interpreted the Internal Revenue Code with respect to this type of deduction in tax exempt income.
Yeah, I know, Bill, this major issue, because people now need to plan, do they need to, for a sizable loan, it could be $500,000 in tax, because now you're not able to deduct the payroll cost, right? So in essence, you're getting taxed. This is a huge issue, and clients are having to make decisions. And you and I you specifically have been dealing with clients that have, off year ends that are having to make these decisions, and they're either paying a big chunk of tax in now, or they're taking a risk that they're not doing it now. And that's your next issue, right? When do you pay it?
Yeah, right. Exactly. If these expenses are not deductible, right? And let's say that decision stands, right? There's no congressional action. IRS doesn't back off. The IRS basically responded to the finance committee meeting saying we got it right. But let's say that just stands, right? What's the timing on that, right? Arguably it'd be a 2020 tax impact, but we know, right? Just based on the 60-day, the 90-day, the portals not being open, that forgiveness is probably not going to happen until 2021. And maybe somebody sneaks in there early and they get the decision rendered from the SBA in 2020. But the more likely scenario is that's going to be a 2021 decision. Well, when do I add back the deductibles? I think it's 2020. The other issue is, you've got, what do you do for your financial statements? What do you do for your tax? Let's say that decision doesn't come until, let's say, May of next year, but you want to file your tax return. Well, how do you file your tax return? Do you file it with the assumption that the expenses are going to be forgiven, or do you file it, with the assumption that they're not going to be forgiven, and then when they are, amend the return? And those,
it's an absolute cluster, and it's unfortunate because there's big decisions that need to be made on cash that, unfortunately, the PPP loan was only a bridge, right? And people are still having to make hard decisions on what they do with their employee base and what they do with their future, and going into a fall season where some of them may not be able to manage another partial shutdown or shutdown. These are big issues. And unfortunately, the political scene in Washington is not allowing for guidance to come out right now. And it's really too bad. Bill, I can move on a little bit on the gap side. This is something that I'm going to breeze through just so we can make sure we keep people on a time frame. But ultimately, there's been a lot of questions on how do you treat these loans on your financial statements. And ultimately there was guidance issued in June, and I reference it here. It gives the entities, most entities, so it talks about non-governmental entities. When you look at this guidance that I'm referencing, and I'd be happy to send it to anybody who asked, non-governmental entities basically are both business entities and not-for-profit entities. We have clients in both, so this is guidance for both. It basically gives most entities an option to say you can either record it as a liability in accordance with ASC 470, or you can, equate it to a government grant by basically looking to IAS 20. And again, this guidance may not be as familiar with you, but I'll explain it hopefully in layman's terms. So accounting for the loan as a financial liability, the wording of the guidance basically says, regardless of whether you think you're going to have it forgiven or you expect to have it forgiven at some point, you still have the ability to treat it as a loan and accrue interest, and then wait for that forgiveness process to happen. It talks about the fact that you're not imputing interest. For those of us in GAAP world, if you have a below market interest rate, you technically should be accruing interest or imputing interest at a market rate. It tells you don't have to worry about that headache. And then you basically keep it on your balance sheet, keep it as a liability until the loan is forgiven in part or entirely, and you're legally released from that obligation. That would be the formal approval of the loan forgiveness by both the bank and the SBA. Then you get into the question is, do you need to wait for the SBA to do a review of it? That's another question that is really unanswered at this point. You got to go through that with your accounting firm. Or you basically pay off the loan and you don't get it forgiven, and obviously that removes the liability. If you do end up recording a forgiveness and you do write off the loan, that is going to cause, for financial statement purposes, a gain in your financial statement. And then we've talked about how that gets treated on the tax side with Bill just recently. And again, for a business entity, now not a not-for-profit, if you're a business entity and you want to treat it as a government grant, this slide will talk to you about basically how you need to do that. Specifically, if you look on bullet 2, you would record the loan as deferred income, as the liability as deferred income, and then you would reduce that liability with an offset to earnings as you basically recognize the cost to which the loan relates to. And in this case, it would mainly be the payroll related cost. So you have to expect and you have to document everything in regards to why you're treating it this way. And you would have to document in a way that says, here's why we believe we're going to meet the eligibility criteria for forgiveness. And in essence, are treating it this way because of the following facts. And that's something you should be working on with your advisors. But for business entities, you have the ability to both do it as a loan or do it as a grant. And then for non-for-profits, you also have the ability to do it as a loan, which was the previous slide. And then you also have the ability to do it for a grant. It just references a different aspect of GAAP guidance, being 985-605. In essence, it treats it as a conditional contribution on the non-for-profit side. And basically, you would record the loan as a refundable advance and reduce that advance and recognize the contribution once the conditions of release have been subsequently met or explicitly waived. And for those of you who work in the not-for-profit world, that is not my expertise, but we have experts in our firm, Brian Kelleher, Amber Tucker, who can clearly walk you through anything in the not-for-profit arena if you have questions in this regard. Bill, I'll turn it back over to you for the last segment.
Okay, so we've talked a little bit about some of these pros and cons, right, of filing now, as most of you folks are trying to make a decision. Well, when do I file? And that's going to be dictated probably by your bank and whether they're even open to begin with. But talking to clients, obviously, getting that, what's the pro of filing now, right? Get that loan off your balance sheet. You may be trying to get other loans, and just to get that off your balance sheet. I don't know how other banks are looking at PPP loans on the balance sheet, but obviously kind of expediting that process to remove that from your balance sheet. Taking advantage of ambiguity. So this is like, so we talked about some of the ambiguous terms, right? For example, the way that the application is designed mechanically, that cost piece, right? Can I put the 2 million in there? And even if I have an FTE reduction ratio of 75%, I'm still in excess of what my borrowing was. Can you take advantage of that? The SBA could come out with version 3 of this application, any day, and that may kind of close that loophole. So there may be an advantage if your fact pattern lines up. Maybe you take advantage of that ambiguity now. Obviously just business expediting the forgiveness. Let's move on and understand how you can manage your business going forward. Those are kind of the pros. The cons obviously is that the bank portals, banks may not be open, but we have heard that some of the ones that have opened have had some IT issues and some operational issues. And so, I'm sure everybody wants to just get this done and be done with it. The last thing you want to do is, go through the whole process, submit, and then kind of find out that, you have to go back through it, right? You've got better things to do. This is clear. So what I have seen the statements from the SBA saying, hey, you have one opportunity to get your loan forgiveness application in. Now, whether they're going to stick to that, if you have missing documentation, I don't know, but that's what I've heard. So make sure, so you want to make sure that you get it right, and then maybe not rush to judgment and try, in a rush to try and get it done, you forget something or you have the wrong data or whatever. So
hey, Bill, this is a huge point. I don't want to I don't want to miss this one. I mean, I think this is a big issue, right? I mean, because if there's guidance that comes out that makes it more advantageous for you to get forgiveness and you've already applied, it doesn't sound like you're going to have an opportunity to go back and ask for the second or the unforgiven piece to now be reconsidered. So as people go through this process, any questions that they have, if it's going to have major impacts on forgiveness, why wouldn't you wait, right, at this point, with everything else going on? But obviously your fact patterns need to dictate that, but huge issue, right? In talking with clients as to, you don't want to get it wrong, have a loan that could have been forgiven, and then you go through a process of now the SBA decides to come out with additional guidance. It's going to be real problematic.
Yeah, I mean, you really need to look at your fact pattern, look at where some of the ambiguous terms are, maybe where some of the gaps are, right? And then analyze that. And if you think I hate to be like this, but if you think you have, if that ambiguity is in your favor, you may want to file now, right? I mean, because
agreed.
You don't want to take that risk. And I will say this, I mean, there have been ambiguous terms all throughout this process, right? And they're like, for example, independent contract, or going all the way back to April, right? Or independent contractors included. Well, arguably they were, The SBA came out and said, well, now they're not. But they said if you applied before that, you can include them. I mean, it really, really messed up all the applications and gave people loans that they then couldn't use those funds. They couldn't use the funds they got the loan for. They couldn't use to pay the people that, the independent contractors. Yeah. So they make them out. But, you really kind of need to take, you may have a very simple fact pattern. If you do, and there's no forgiveness, there's no forgiveness issues, you move on. And get it in and move on. But we really got to look at those things. Can you just go back 1 second there, Frank? There was one other point I wanted. Just on that post-election legislative action. As some of you may have seen, there was I think it was called the PPP Small Business Forgiveness Act. That was an act that didn't pass. It was I think it was in the Senate, and it was basically saying if you had a loan under $150,000. Basically, you sign a one-page attestation form saying I followed the PPP guidelines, and it was automatically forgiven. Well, if you have a loan that's under 150, it might be a reason that you kind of wait to see if that legislation gets a little bit more.
Yeah, that's a great point. Thanks for bringing it up. I mean, we've had a number of questions that I've tried to address periodically on the 150 rule, as we call it. Not in place, right? And we don't think it's going to be in place until post-election at this point. But it is not something that you can take advantage of at this point. And so as you go through your process, I think, Bill, and this is just me, my own, soapbox. I think something's going to happen here, personally, but I don't think it's going to happen before the election in November. So,
I agree.
But, Bill, shout out to people giving us comments, and apologize we haven't been able to get to them all. But, we're at the noon. We're going to keep going a little bit because we got a delayed start. But give a shout out to Tony R. In his comment. Oh, my God, the tax issue is a total cluster. It absolutely is a total cluster. It is a big issue that people are underestimating, from a standpoint of reserving of cash flow as you go into year end. And understanding the fact that you may have more taxable income than you ever realized, and you may have a taxable liability that is well beyond now what your expectations were. And that is just not the answer that most people who are trying to manage cash flow during this time are looking to accomplish, or even understand how they're going to deal with. Bill, anything else on this slide that we want to just point out real quick?
Yeah, just the last bullet there, right? We mentioned it earlier. I mean, if you have an FTE issue that you need to address, you may have to wait till December 31st anyway to get that rehire exemption in place. If that, if that's a fact pattern that you can achieve, right? If you think, I've talked to clients and said, hey, listen, we laid off, 15 or so folks. We know we're not going to be getting to that number, that February 15th number that we needed to get to in order for this exemption to kick in. So it's not even a consideration, but other folks may say, we do want to get there and we think we can get there. Well, if you think you're going to get there, then hold off at least until December 31st, because you're going to need that exemption to kick in. Yeah,
Bill, I mean, listen, again, just to remind people, we will be sending out the presentation to those of you who have asked online. Yes, we will. We have contact information here, and we have our website. It's really hard to get through all of this information within a 60-minute time frame. And the fact that we've had some people had some issues on their side getting in and getting access to the audio. And then we've had some people obviously heard the fact that Bill had some issues on his side due to his kids actually wanting to learn online, which is unbelievable. But the thing I want to say too is there's so much uncertainty as to next steps. Bill, you talked about the 150, but we also, been reading about the fact that, there's potentially, this whole HEROES Act and this new stimulus that potentially is coming out, and, something was trying to get through the process, the House yesterday, I believe, and was trying to increase or impact PPP and potentially add some more stimulus into the economy. We don't know what that's going to do to the impact of PPP. It's kind of been vague. And Bill, I think you agree, right? We did some history. We tried to do some research before the call today, and we just couldn't get any guidance. Not that we think it's going to get passed, because this HEROES Act, I think, is tried once and got delayed in the Senate. And I'm not even sure it passed the House yesterday or last night. It was a late vote. but there's a lot of uncertainty in even what that has for guidance as far as what maybe another round of PPP loans that now can be available for people who've already applied, and what that may do to the forgiveness process. So there's even that's out there that may get clarified in November or December. So.
Yeah, no, I agree. I think your November, December timeframes are probably more likely, right? It's just you saw the unity, somewhat I'll call it unity when this thing first came into our country in March, and the House and the Senate and the various parties seemed more unified in getting legislation passed. But the fact that there hasn't been much passed other than the Flexibility Act, and then the guidance has kind of remained relatively stale. I think it just shows you kind of this typically happens during an election year. So
yeah, and obviously we saw the debate and what the debate presented in the form of, I'm not sure you can call that a debate. I think I called it online. People who follow me on Twitter, which I think there's 4 people who actually follow me on Twitter, Bill. But I think I called it a typical Sunday afternoon dinner at any Italian household. It was basically a bunch of people yelling at each other. So it wasn't really a debate, and that's unfortunate for America. But I think that ultimately tells us why that we're not going to see much in the way of guidance over the next month or two, and that we're going to have to let this thing kind of vet itself out. But a good way to kind of try to wrap this up, because we do want to allow you to move into lunch and get into, is we will send out this. We will highly recommend, and we do this for a whole host of reasons. One is just trying to help our clients, but also anyone who's working with other advisors. I mean, listen, everyone's in this together, and we're all just trying to get it through, a process that's reasonable. Reach out to your advisors, reach out to us, reach out to whomever you think is going to help you. There are a lot of unanswered questions, but to have another person to talk it through with and to run things by, we know our clients are seeing value in that. And if we can help in any other way, please do reach out to us and go on our website. And again, please send us emails about topics that you would like us to dive into. We'll send some sort of a short survey out to try to get a flavor for some of the hotter topics that we can do mini webinars on. And we'll make sure we do it when Bill's kids are actually in school and not taking up bandwidth at the house, because he's critical to this. Bill, anything to add to that before we sign off?
No, I think you hit it there, Frank. Like I said, I'm excited to try and, obviously with an hour we couldn't, really dive into, owner compensation, but there's a lot of stuff. There's a lot of stuff there. There's a lot of information that I'm sure folks are looking to. So, that's definitely one that I want to do a little mini webinar on. But we'll take a look at the feedback, and if there's interest in some other area that we're not thinking of, we'd love to spend 30 minutes and really, explore those areas and make sure that we're getting all the information that's out there available to our audience.
Agreed. Well, thanks very much, everyone, for joining us. Courtney, can you have to end the webinar by ending the live event. So I will tell you everyone that we're going to sign off, and thanks very much for joining us, and have a great day.